Well, take a look at this. Dow futures surging past 26,000 this morning. We've got Jonathan Hoenig at capitalistpig.com joining us right now. Jonathan, all right, we've been looking at these numbers all morning. Futures market saying we're going way above 26,000 today. What is behind this? Was it the three-day weekend? Is it something out of Washington? What are you seeing, sir?
It is a bull market, Cheryl. It's been a bull market for many years, and it's really ramped up, of course, since the presidential election. There's no disputing that. And the bull market continues as evidenced by those higher prices. As you said, I mean, 250 points, 260 points. It's not what it used to be. It's only about 1% now. But think about it. It was just 100 points back when the Dow was at 10,000. So it's a bull market. I think there's reasons to be bullish. You mentioned earnings. I have to say, though, I think there's some many reasons to be a little concerned, too. I mean, we're all very excited about 26,000. But, you know, there's indications we've gone too far. Retail stock exposure now at an all-time high. Debt, credit card debt now at an all-time high. Confidence at an all-time high. These are good, but they tend to be contrarian signals and one indication that despite this record run, some type of correction is likely imminent.
Okay, I want to see those. I want to see the full market three-board again with the futures, just to kind of point out a couple of things here, because it's not just the Dow. I mean, really, many people, and you've said this to me before, you really have to look at the S&P to get a broader swath of what the market is doing. So you've got the S&P, even then, that's up more than almost 0.5%. The NASDAQ up more than 0.5%. I mean, this says to me technology. This says to me manufacturing when you're looking at the S&P, and then, of course, the Dow bug. But the broader market is the S&P, and that is still very strong. What do you say to that, Jonathan?
Yeah, extraordinarily. I mean, the real winners last year, Cheryl, were the so-called FANG stocks, the technology stocks that you know, the Facebooks, the Amazon, the Googles. But as you said, I mean, as the saying goes, a rising tide lifts all boats. And the financial stocks, for example, obviously they're very much in play this week. They've been leading the charge as well. Some of the big financials up 40, 50% in just the last year. So that's strong as well. It's a bull market. Almost everything's up. And despite the fact that Bitcoin is down this morning, the stock market is up, continues to be up. All stocks are following suit.
40% since Donald Trump was elected president. I mean, really quick, though, you know, you mentioned the financials. I want to get into this. We're going to hear from Citi today. The estimate on 119 earnings per share. United Health, 251 is the estimate there. The financial stocks, those were a strong driver in 2017. Are you looking for these guys to perform again?
Well, one of the big factors for that, Cheryl, will be interest rates. We know that tax cuts are gone. Tax cuts are done. That's been a benefit for all stocks, especially financials. But one of the things that's really been powering these financials have been the higher interest rates. So they're nearly all at all-time highs. That's bullish. We'll have to see the reaction to earnings, because if they sell off against the earnings, that could be an indication that the economy is actually slowing and lower interest rates are back on the horizon. As usual, we'll be watching very closely.
We're getting B of A, Citi, Goldman, Schwab, Amex, Bank of New York Mellon. I mean, this is the week for the banks. But, you know, to your point,
it's going to be a big week.
It almost sounds like you're saying that these guys aren't really that interest rate sensitive anymore.
No, I think they're tremendously interest rate sensitive, in fact. So we're going to keep an eye on both on the price of credit, obviously the bond market, but on the financials as well. It's been a rising tide. Financials have been among those leading the way. If the market's going to continue, they're going to be right along for the ride.
I just think that to see that momentum, that trend with the financials, you know, we know that we've got interest rate hikes coming this year still. The performances of these stocks has been incredible. So we shall see. We'll have you back to talk about it. Jonathan, thank you very much.
Thanks, Joe. Be well.